Kunal Bajaj, research analyst at Choice Institutional, joining us. Kunal, was it surprising that the organic growth was cut down sharply?
Yeah, hi. Thanks for having me on the show. Yes, actually, we were expecting this because in the last quarterly con call as well, the management has mentioned that there was some weakness in the manufacturing space. So we were expecting a 50 basis points cut in the upper end. So yeah, this is on the expected lines.
If you look at the midpoint of the guidance, it's come down from 2.3% growth to 0.6%. So it's more than 50 basis point. And the current guidance which they have given of 1.5 to 3% includes the new acquisition, which accounts for nearly 1.7% growth.
Yeah, that was a bit of surprise for us as well because 1.7 percent would be the inorganic contribution. So if you see organic contribution is very less if we see the upper band of guidance as well.
I want to talk about the AI-led revenues as well, Kunal, and hi morning firstly. That's now at about 8.25% of the total and growing over 10% on a sequential basis. But it hasn't really been enough to try and, offset the broader shortfall that is. At what point would you say that AI would actually become revenue accretive for Infosys?
It is very difficult to put an exact timeline as to when it will offset. As in productivity pass-throughs is very different from each company to other. So TCS in the con call they have mentioned that productivity is around 10 to 15%, which is your productivity pass-throughs. Infosys haven't provided that number, so it would be difficult for us to put a timeline. But we expect somehow by the end of FY28 we can see AI revenue offsetting the deflationary pressure.
The other thing that stood out, and positively so, was the fact that large deal TCV came in strong at $3.6 billion thereabout. Does that pipeline sort of give you confidence in perhaps a second half recovery for Infi?
See, Infosys is obviously we have seen that it's H1 heavy. H2 is operationally weaker for Infosys. So it would be difficult for H2 FY27 recovery for Infosys as per se. And the also challenge which we see across Indian IT space is the conversion from deal TCVs to revenue. So that is a challenge going forward as well. Until unless we see strong conversions and as well as client delays, we can expect the recovery to be gradual.
How are you looking at, hi Kunal, good morning, this is Harsha. How do you look at productivity gains which are accruing? Because margins came in, at least versus consensus, a wee bit higher.
See, AI productivity is there internally. This is also helping them to overall keep margins in check. But we have to also see that there is pricing pressure as well as softer volumes. And a one-off client termination haven't helped the company either. So if we see AI continues to emerge as a meaningful growth driver, but we see that enterprise adoption is currently at the very nascent stage. So until unless we see strong enterprise adoption, we would see this AI deflationary impact to be offsetting the revenue growth.
Kunal, Ashish Kumar Dash, he takes over as the CEO only from April 2027. That's a very long runway or perhaps transition time that he's been given. How do you think the street is going to read into that?
Yeah, so Ashish has been associated with the company for a very long time and has held different portfolios across the company. So obviously it would be a strong indicator, and the next 1 year, I believe, would be a transition phase for the company. And as per the Hexagon strategy, AI strategy, so we believe that Ashish would focus more on delivery as well as sales along with the AI implementation. So yeah, going forward, we expect very good runway in the medium term.
Okay, Kunal, great to have you today on the show. Thank you so much for your time.
Thank you.
Okay, let's take a very quick break.